Okay, so for this week's homework topic, so I'm sharing my screen. It's gonna look like a video feed. Um, so I think you could just, if you're on your phone or if you're on a computer or something, you could probably just double click it and it'll enlarge and you should be able to see full screen. Um, Let me do one more thing. Where is it? Is it this? Okay. And let me just make sure that I'm recording this. Can somebody just quickly jump on voice and just give me a sound check real quick, please? Okay, perfect. Appreciate it. All right. So on today's lesson, I just want to talk about this is something I'm surprised that not more people are here, but it's fine because this one's gonna be recorded. I want to discuss entries and exits. Finding entries on plays. Really, the most important thing is entries. Exits, I'm not going to spend more than like 5 minutes on. Entries are really the most important part of trading options. It's the most important part of getting making money on plays. It's all about your entry because most of us can get into the same play, and we get different entries, and those different entries will determine, somebody can get in at 50 cents and somebody can get in at 25 cents, and that 25-cent entry, you're already thinking about taking profit by the time the contract reaches 50 cents. Whereas the person who's in at 50 cents, there's a lot more of a move that needs to occur before they can make their 100% of their dollar, right? So entries matter. Entries absolutely matter. It's probably the most important thing. The most important thing in your options trading career is entries. So let me just I'm gonna switch this up what's going on. While I just talk through some quick talking points we're gonna go through tonight, and guard your eyes, guys. This one's gonna hurt. Okay. Now that you're awake, so a few things. So in terms of what are indicators for entry, that's subjective. It doesn't. There's no like clear cut. There's no clear cut. This or that happens, and now you have your entry, right? There's no clear-cut formula when there's a perfect time to enter a trade. It just doesn't exist. The reason why I say that is because, for example, I have my formula, and to me, it's very clear. Cedro, make sure you're talking to us in the. Let's keep it in the homework channel just in case, so that people can follow along. Everybody, you can chat in homework chat here. So, the reason why I say that is because, for example, I can give you guys all the few things that I look at whenever I'm entering a play that works for me that might not work for you. It just might not work for you. The reason being, you might see the setup a little differently. Maybe chart patterns are clearer to you than they are to me, so I don't even use them. Maybe some indicators, it really depends. So it's all subjective. So, the point of this isn't for me to just give you the holy grail, right? It doesn't work that way. Many different setups work for different tickers. So you'll find some of the same kind of setups presenting themselves. I see you said I just finished a great workout. That's good, man. I gotta get back into running. I've been wasting a lot of valuable time not exercising. So yeah, there's multiple setups present themselves in different ways on the same ticker, and not only that, but you can play one ticker and it'll give you 5 different setups. So really, part of this too is not only finding what works for you, but maybe it's just the one thing that works, but maybe it's the two things, 2 setups that you like that usually work for you, or the 3 or 4 setups that you like that usually work for you, right? Depending on what you see and kind of what your win rate is for those setups. So that being said, there's no clear formula, and what works for me might not work for you, but there's a few things that are universal. So those things are. And actually, before I get into those things, Before I get into those things, I want to ask you guys. Go ahead, put in the homework chat. Which tickers did you trade today? Let me know which tickers you traded today. I see SPY, SPX, AMD, XPX, Nike, IWM, and AMD only. Yeah, Spider's been playing IWM pretty religiously. Obviously, Fab has been playing SPY and SPS pretty religiously. STB's been playing SPY pretty religiously. Cedro's been playing SPX pretty religiously, and that's I'm really loving that, seeing the same kind of consistent tickers amongst the same people. And I'll get into that a little bit later. But okay, so you guys found, so everybody who traded today and took, I see 5 people in here who posted tickers. Give me one reason why you entered the ticker. Give me one reason why you entered the play. It doesn't have to be anything crazy, just a simple reason. Fab says entries triggered. Cedro said candle legs. Let's see. STB said it broke the 9. J Mitch said met his criteria. I use 9 EMA and candles. Candle dropped below the 9 EMA. Sorry for short explanation. I'm driving. All good. Don't even worry about it. That's all. That was enough for me. Entry within my levels and 9 EMA 21 cross for me. Okay. So those are all very, very distinct points that you said, okay, this is a good place for me to enter. I feel confident in my entry. Now, for everybody who took a trade today and everybody who put their setup and as to why they entered in the trade, was your trade profitable today? Let me get a 1 in the chat if your trade was profitable. Okay, I love that. A lot of profitable trades today. Okay, love to see it. All right, cool. So I'm gonna jump into the first part of this, and then I'll get back to you guys and kind of see where we're at. So for anyone who just joined us, the first point of this I said was, there's no clear formula for when to enter a trade. Like I don't have a holy grail setup to say this is when you enter a trade. It doesn't work that way, because whatever setup I see that works for me, that brings me success, might not work for you. The reason why is because maybe you see things differently than I do. Maybe you're on a different time frame than I am. Maybe you, maybe for you it might be a bear flag, and for me it might be setting up an inverse head and shoulders, right? Like things are different for different people. Another thing that I mentioned was that there's many different setups for different tickers. So you'll see like similar setups on different tickers, and sometimes even one ticker will give you a bunch of different setups depending on how you look at it and depending on what time frame you're on. So now that we're caught up, there are a few things that are universal when it comes to finding entries. Some of those things are, and they're very, very simple. So the first one is to not try to play counter trend. Don't play counter trend. And what that means is, if the market's going down overall and the sector that your ticker is in is going down and it's in a downtrend, and if the ticker's chart itself is in a downtrend, there's absolutely no reason to buy calls on it. There's no reason to buy calls. And I'm not gonna lie and sit here and say, hey, this never works, because we catch bounces all the time. We catch small bounces within downtrends and small pullbacks within uptrends all the time. But you can't bank on it 100% of the time, right? We want something that's proven, that's consistent, something that that you can kind of say, oh, here's my setup, I'm gonna take it. It's worked for me 10 times in the past, I'm gonna take it. It doesn't always work to play, especially the market. For example, today is a great example. Like with all the news and everything, the market pulled back like crazy. So anybody who played calls, unless you were playing in very strategic tickers, you got killed today, right? Or your stops got triggered very quickly, right? Hopefully, that's the case. So that's one. Stay with the trend. If the trend says up, everything says up, then go up. Buy calls. If everything says down, then go down. Go down, right? So that's the first part. The second part is use the larger time frames to confirm the trend. So use like the 15-minute, 30-minute, 1 hour, 4 hour, 1 day, 1 week, etc., depending on how fast how long you're gonna be in your trade. The longer you want to be in your trade, the higher up you want to go, right? So use the larger time frames to confirm the trend, but use your smaller time frames to find your entry. And obviously, I think that everybody here is quite clear on that, but I just want to reiterate it for the person who might be starting today, right? You want to find your entry on the 10-minute. Like, look for something that says on the 10-minute, hey, this is going to go up if I want to buy calls, right? Let me zoom into the 5-minute, right? So let's say, like, this is Macy's. This is Macy's on a daily. Actually, let's do what went up today. Today was a weird day. Let's look at OCGN. because OCGN moved today, and I have a setup for OCGN. So looking at this daily chart, it's really ugly. There's not much going on with it, right? Like it's kind of like it did like a triple tap up here, and then it just been kind of in a downtrend ever since. And today it gapped up and it made a nice move today. So I don't have much time frame continuity on this. We are higher than we were back here in December, so we are higher. But lately we've been in this kind of downtrend. We kind of broke the downtrend on the week of January 28th. We started to break the downtrend, and we kind of went sideways and consolidated, which is nice. When you're consolidating like this after a downtrend, that means that there's a possibility for it to change trend. So that's nice, right? So that's kind of my daily. Let me look. That's what my daily's telling me. Let me look at the let's look at the 2 hour, right? And we gotta kind of ignore this because we're working on today's kind of price action. So ignore today's. Let me put a box on it so we don't confuse ourselves, or so I don't confuse myself rather. So we're gonna ignore this box. Let me see if I can actually. Yeah, cool. Just candles and more. Okay, so we were kind of in this downtrend for a minute, and then we kind of double bottomed and then went sideways for a few days. And as of yesterday, right, or Friday's price, we kind of broke that downtrend, right? We had that downtrend, we broke it. We gapped up above previous resistance. So that's what the 4 hours telling me. The 2 hours telling me. Now let me go into the 1 hour. 1 hour, pretty much the same thing. I got kind of a triple bottom here. I got a double bottom here into kind of a triple bottom with higher lows and higher highs, right? Here's your high, here's your higher high, here's your higher high, here's your low, here's your higher low, right? And then we got that gap up. Let me go into the 15 minute. So now 15 minute is where I start to think about where the key areas are in order for me to say, okay, I see that this ticker has come down to this level a bunch. This is a particular level that I'm interested in, right? So, and again, this is kind of fundamental, but I'm just going to do it for the people for the one person who's going to watch this for the first time and say, oh, this might be helpful. Scanning from left to right, I'm going to place my cursor over where the pivots are. I look for pivots typically, and sorry for that hard P. I'm very close to the microphone right now. I look for pivots and I just kind of scan with my eyes to see if there's a bunch of price action occurring alongside that line. So I see there's one here. So I'm going to put my pivot there, my line there. And as I look across, there's a kind of a support here, support, right? So just working my way from left to right. I see that there's something here, but there's not too much. I see that there's something here, so I'm just going to put it. This is kind of not much there. And this is how I do my plotting, by the way, my charting. I just kind of start with the larger time frame and get kind of a bias. And then I work my way down to kind of see where the support and resistance levels are, crucial key levels. So we did that, right? Now I see that we gapped up. I see that we gapped into the pre-market, or rather Friday's after Friday's market close, we kind of made this gappy move. So I'll go into the news and kind of find out what's going on with OCGN and see why it moved like that. If I did my research, I would see that they got federal approval for their COVID. I don't know if it's a pill or an injection, but it's something to fight COVID, which is big nowadays still, especially for a small company with a small float such as OCGN. So big gappy move. People took profits, obviously. Now we're in the pre-market, and I kind of want to see how things are unfolding along these lines that I drew. Right, so let me pull it back to market open. So, and whenever you're thinking about entering a trade, for example, if this is me personally. Now, this might not work for you, right? So keep that in mind. If I'm thinking about entering a trade and I see a setup that I like, and I was thinking about it and I was charting it and I was kind of like building my case to go to the upside or downside, and I even put it in the watch list channel for other people to kind of give their feedback. Then and if things line up, then what I'm going to do is I'm going to watch a pre-market to see how it interacts with my levels, and also to see usually where the pre-market highs and lows are. Now, I'm not really going to count this because this is quite extreme, but I will count this low right here, this pre-market low that I have so far right here. And actually, I'm going to put it over here. I just scanned across left and right and saw that it was an area where there was a bunch of kind of resistance, and now it's acting as support. So I have my levels. I'm ready to go. I looked at the larger time frames to kind of confirm the trend. I see that it was in a downtrend, went sideways, and now it kind of broke out of that downtrend based on the move. And so now I want to think about buying calls, right? Excuse me. So now I look at the open. I kind of got my candlestick. Let me see if I can. I'm actually going to put this on a replay. Let's see, replay. And I'll start it from here. And we'll make it a little slow. One update every second. We're going to update it. So I have my levels. Now, I have no indicators. Right now, it's just some lines and price action. I want to see, I'm expecting an interaction with any of these lines, right? Since the price is in between this line here, I'm going to change the color of it to green, because if we go above this line, then I am going to consider buying calls. And I'm going to change the color of this line here to red. Where am I? I'm going to change the color of this line to red, and if we go below this line, then I'm going to consider buying puts, right? And this is not me like, this is already me knowing which put I'm going to trade. This is already me knowing, having looked at the chains, having already built my bias. This is a terrible ticker. Like this, I know this ticker went up today. That's why I chose it. So I have a few others that we'll look at and kind of see where, I'll let you guys tell me where the best entries were. So this is OCGN on the 15-minute. Every candlestick is 1 second. So let's go. So we came down, we crossed our threshold level. Now I want to pause it there real quick. We opened up, and can I pull it back candle by candle? Can I? No. So we opened up and zoom into this. We opened, and as soon as it opened up, it opened below my red line. So the first market before the open kind of came back and tested that previous level of, where I'm going to enter puts, where I'm thinking about entering puts. Now, I'm not going to enter puts at the very beginning of the market. I personally don't trade. I don't trade at the beginning of the market. I usually wait for something to a setup to kind of present itself. Now, for some of you, that setup might be, hey, it broke my pre-market pre-market high, which is right here at my pre-market high, which is right here at 415. That's enough for me to get in. If it gave me some volume and it broke it, that's enough for me to get in. For others, it might be like, okay, it gave me a nice bullish engulfing on the 15-minute. And the first 15 minutes are super volatile, as you can tell, because it obviously opened down here at 385, went all the way down to 373, and then closed up higher than it opened at $4. So very volatile candle, bigger, big move, big rangy candle, broke through the previous resistance of a few of these candles. And I didn't enter puts because this is a crazy ass swing. Like I needed to, usually for myself, and this is just a me thing. It might not be a you thing, but it's a me thing. I look for it to come back and test the level. So break, come back and retest the level, and I'm gonna get in on the retest. I like to get in on the retest with a confirmed kind of, a confirmed nope, a confirmed Mutombo pushing it back down, or I like it to come back to this green line and kind of test it, stamp its feet real quick on the floor to make sure that it's a strong support. And if it is strong, okay, bet I'm gonna continue my move to the upside. That being said, it triggered the call line, but I didn't get in. Right? Let me continue playing it. So with that being said, let's say you would have entered on this green candle and you would have taken it. Now, if your intention is to scalp, then you could have been in and out on this green candle, even on this one. And when you see this big massive move, you could, if you're fast enough and you're like staring at it and you have your finger on the trigger, you could have made a nice move on this. And forget about the actual the dollar amount. price of the contract. Focus more on the physical move itself, the candlesticks, and the physical move of the candlesticks itself. If you would have entered for a day trade, which is longer than a scalp, maybe an hour or 2 hour trade, you might get shaken out on this candle. I've been shaken out on the candle on something like this a bunch. The reason why this would have shaken me out is because obviously big gappy move. We tested the bottom of the range. We created a new high. We kind of tested the top of the range. And so this is kind of a 3-bar play. I mean, not really, because this came all the way down to more than 50%. But anyway, big move to the upside. And then all that move was taken away and sold off. And actually a bearish engulfing candle on the 15-minute was formed. So this candle has a bigger range than this candle. And it pretty much, undid all the gains of it. And then we came back down. So easy way to get shaken out, which is why I don't play the breaks. I play the retest, because it broke and then it came and retested this level. Now I see right now at this current time, I see some buyers on this green line, which was my initial entry, which obviously I didn't take at first. I see some buyers there after breaking, making crazy bullish bearish engulfing, and then coming back to test it. It didn't flush through it. It didn't break any of these lows. It came back to just tap it and see what it was about, right? I see some buyers stepping in. I'm going to go ahead and press play. Now we flush underneath. We flush underneath immediately. And if somebody had a trade that they entered here and they were responsible and they set their stop loss to like right around here, where this kind of low is over here, they might have gotten taken out right here. They might have gotten stop hunted on this one candle right here. The reason why I'm constantly looking for, I've been, it's hard to stick to this rule, especially when when the adrenaline's flowing, you see the charts, people are already making money by this time. What time is it? It's like 10 a.m. Oh, it's already like 11 a.m. People are already making money by this time, and you still haven't even taken a trade, right? So you're kind of antsy. I like to wait for these candles to form and to close, because if you don't wait for them, this came all the way down here and tested kind of this area, and you could have got shaken out of your calls, but if you would have just held it and let the candle close and confirm, then you would have seen that a bunch of buyers stepped in, and really buyers love it at this green line. The buyers love it at this green line. And I have this charted on my TOS, so let me open my TOS in the meantime. So we can see kind of another couple of things that I noticed on it that I liked about it. So if you had your stop set pretty tight, you got shaken out right here, stop loss, not a bad thing. I mean, if you have a stop, that means you're responsible. You're not gambling. You have a calculated risk, which is good. And sometimes it just doesn't work out in our favor. At the beginning of the day, sometimes we get taken out, and then hopefully we get a re-entry. So I'm gonna go ahead and press play. We got some buyers at this green line. I'm gonna press play, see what else it did. Now on this retest, on this test, I'm thinking about buying. I probably, when I see buyers step in, I would probably load, like let's say I want to do 5 contracts. I'll probably buy 1 or 2 on this. When I see this kind of flush down, I'll probably buy 1 more. When I see the buyers step in and bring it back above the line and start bringing it up, I'm gonna probably buy 1 more, and then I'm gonna finish my position when I see these candles kind of start making, cutting into this downside move. So when I see a candlestick kind of break above this, I'm gonna buy another one, and when I see it kind of working its way into this territory, is when I'm gonna finish my position. So I'm gonna press play on this. And the reason why I like to scale in and out is because you don't have to go full position and get clapped immediately, right? So we got even another retest, and then it just kind of started, a bunch of sellers up here, but OCGN, they liked it today, and although some people could have got shaken out on some of these moves, they're very, very scary moves on a 15-minute. But with a little bit of patience, you'll see that. And boom, right there. Let me just. I have to. What day was this? Oh, this was this was yesterday. All right, so this happened yesterday. So if you would have got triggered in on an entry here, and you held it, you would have got killed on this candle. All stops would have been taken out. If I would have got in here on this confirmation of this, full position here, and I didn't take my profits, which I likely would have not taken my profits on this. This is yesterday's candle, no wonder. I wouldn't have taken my profits on this. I would have got killed. I would have, and I would have probably seen like 30-40% up here. And then it would have got taken out. I would have got a little bit greedy because I would have said, hey, we're forming, and this is the thought process. We have a low down here. We have this low over here. And even though I didn't get to take my profits on this big move, and there's a bunch of sellers in this area based on these upper shadows, and I got this big red flushy candle that broke previous lows. This is actually a bearish engulfing, which took out the high and the low of this candle to the downside. And now we're bear flagging, all that stuff. I would have been focused, since I'm in my calls, I would have been focused on this higher low. And even with this breakdown, I would have said, I'm fine. This is fine. Everything's fine. I got time. Don't worry about it. And this looks like it happened at 4 o'clock. So I would have been sweating and very silent in the server, right? So let's look at OCGN today. This was yesterday. This was Friday. So let's look at it today. This is aftermarket, a bunch of stuff. Oh, was that it? Oh, that was today. All right, let me bring my TOS up because it looks a little bit different on TOS. Give me 1 second. TOS. Okay. Let's go to my charts. And I want to remove all studies. Before I get into the Thinkorswim chart, I should have probably started with this, but before I get into the Thinkorswim chart, I'm going to touch on a few topics. Remove all studies. And let me make sure. Okay. Do I have anything on that side? No. Okay. Okay, so, all right, so this is OCGN. Let me go to my daily. Let me go to, sorry, my 15-minute. And this is today's price. Come on, bro. Okay, this is today's price as of here. We broke through the downtrend. We broke through that downtrend and we kind of gapped in after hours. This is after hours on Friday, and then now we have market open, which is right over here, right on this green candle. Now, before I continue, we got time frame continuity, which I guess I'll show you on a different. We'll look at a different ticker to kind of double back on that. The last thing is if you're looking for calls, you want to buy on red candles. If you're looking for puts, you want to buy on green candles. If you're looking for calls, you want to buy on red candles, and if you're looking for puts, you want to buy on green candles. Now, I know that sounds like straight bullshit. That sounds like very counterintuitive, but I want you to stick with me for a second. Whenever you buy on a green candle, let's look at Macy's today. I bought on a green candle today on Macy's, and I bought Macy's today because I thought that the earnings beat was a strong enough catalyst to ignore what was going on with the rest of the market. Right? That's why I bought it. Let me see what's going on with this. I have to reconnect. All right, let me close this. I'm gonna open it back up. I bought Macy's because I thought that the earnings beat was a strong enough catalyst to ignore the market conditions. That kind of went against my rule of playing counter trend, right? Because the market's telling me everything's gonna go down. The news is telling me everything's gonna go down. Even on our watch list call, we discussed it. There's no reason to buy calls because everything is gonna go down. That being said, I got into some 28 calls for this week because I saw the strength, and I figured that. Let me make sure I enter my password right. I saw the strength, and I figured that it would continue. I figured that, hey, this is strong when the rest of the market's weak. It has relative strength to SPY. X, Y, Z reason. It broke my downtrend resistance. All this stuff. It was forming a base at the beginning of the market open. Pre-market, it was forming a base. There was like 2 or 3 more reasons why I thought that it was a good trade to jump into. And I had a very strict, very very strict profit target that I had in place. So I wanted to take like 30%. I didn't want to take much. Let's see if it loads. It should load now. I didn't want to take much. I just wanted 30%. And the setup that I saw for Macy's was, this is my chart for Macy's. It had this falling resistance here, and we kind of had this line here that we played off this line a couple of times. And so on the analysis, I kind of saw this kind of choppy movement, but then I didn't want to do anything with it because I know there was earnings today. And so if you go back to our watch list, let me pull it up for anybody who might be watching this on YouTube. And if you're on YouTube, checking us out on YouTube, then we have in our watch list channel, we have I'm trying to take that channel to the next level, and so I'm like, we have our analysis in there. I usually do like a bunch of intraday analysis in there with whatever setups I see. Not so much for people to take a trade. I mean, you can, but more so for people to kind of bank on it, try to capitalize and learn on what they're seeing in there. So let me look at. I have Macy's, and I think we looked at it on Thursday. We looked at it on Thursday, and then I looked at it again on Friday. So I'm just scrolling through. See AMD, MU with the cup and handle, Macy's. So I'm looking at Macy's, and I have this is what we were looking at on Macy's on Thursday night, and somebody had asked for an analysis, and I told that somebody, where's my server? I told that somebody that I seen another retest of the gold line, which is that 2484. I see all the moving averages are pointing down, so the 9, the 21, and the 50 all pointing down, and price is sitting underneath the moving averages, which are all pointing down. I didn't like anything because we weren't at my level, at this level where we can bounce at, and we weren't at the top of this. Although you could have played the puts, you could have played the puts and you would have made some money. So that was Thursday. Let's look at Friday. I think I recapped a little bit on Friday. And then I'm going to go back into today to kind of wrap this part of it up. Let's see. I'm just scrolling through. And I have a few setups today that I think that we can talk about. This is not it. Here we go. So I posted in the watchlist channel. And this is the same line. You can see this line right here. And this is Friday. And I posted... Macy's rejecting the 9 and the 21 on the daily. So the 9 and the 21, which are this white line and this gold line, it kind of came up to it and rejected it. It opened lower and it kind of came up. So it's still in the same range. It didn't come down to my line, so I didn't take a play on it. So that's another thing. I like to play these things when they come down to my level. So with Macy's, let's look at Macy's intraday. Let's look at the 15-minute and let's look at everything into the open. So now if you look all the way to the right, you'll see that we broke this downtrend line right here, this long-term downtrend line with an earnings beat, and we got right above it. We made this high over here, and then we came down and we set a low, and then we have market open right here. So on market open, we put in a big bullish engulfing candle to take out the highs and lows of these 3 candles. 3 pre-market candles. Now, pre-market candles don't really matter much because they don't have a lot of volume, but that's still to me very, very bullish. I took 28 calls. I think I was at 27.50. Yeah, at the break of 27.50 when it came down and it broke, because I was anticipating I was anticipating a break of this high on the next candle, right? So I entered at 27.50. It broke above the previous candle, and I said, okay, boom, this thing is going to give me 50%, right? I entered the trade wanting 30, but when I saw how much strength this was coming in with, I said, this is going to give me 50%. So it went in the money immediately, and so I'm like, all right, this is in the money. It's on the first candle of the day, pretty much. I can hold it. The next candle came in. This candle opened up at 28 in the money. And then it went up as high as 28.16, and it didn't break the high of the previous candle. And these are 15-minute candlesticks, so there's enough time for this to kind of develop. right? So it didn't break the high of the previous candle. It went all the way as low as 27.47. And I was sweating because it came right back to where my entry was. And so, and I wasn't trying to trade through it. I didn't have the ability to trade through it. I was on my phone. I wasn't at my desk. I wasn't in front of the charts the way that I like to be set up, right, when I'm trading. I was on my phone watching it on my TOS mobile. So it came back to my entry. I didn't get to average back in. I just wanted my original play, and I had my 30% on this, and I didn't take my exit because I anticipated more. I didn't get a break of the high of this on this candle, in this 15-minute candle, but I noticed that the volume was very, very low compared to the first two candles. So I said, I'm just going to hold it. It's going to give me more. Did anybody put a 2 in the chat today if you looked at, put a 2 in the chat if you looked at Macy's chart today? Put a 2 in the chat if you looked at Macy's chart today, at some point today. Right? So I see Gavin, I see BT, and I see STB put 2s in the chat. So you guys know what happened. And Gavin said I almost took that 28 call as well. And I saw you talking about the 28 call. I saw you talking about it too. You guys know what happened with Macy's today, right? So for those of you that hadn't seen the chart today, I'm just gonna go ahead and scroll piece by piece the way that JCat does it, ticker by ticker. So the next candlestick, inside bar, big red body, but still inside bar, very, very low volume. Very, very low volume. So I'm looking at this and I'm like drawing these candlesticks in my mind. I'm like, oh, this is gonna be a 3-bar to the upside. If I look at the 1 hour time frame, this is like a 3-bar play to the upside with a resting bar, a whole hour of resting bar compared to the big volume on the start. Like this is me talking to myself as I'm in meetings, I'm doing all kinds of shit and I'm trading at the same time. So I'm like, all right, cool. We didn't make a higher high, but we didn't make a higher low. There's lower volume on this. I'm good. I'm straight. I'm about to get this. I already have my 30%. Now I'm back to pretty much break even because the IV came down from the start of the day, and so I'm back to break even. But I'm gonna hold out. I'm gonna hold out for my 30% that I originally wanted. Here's the next candle. We break the low of the 2 previous candles, and we retrace 50% of the move on not as much volume as the first 2 candles of the day. But it came all the way back down to about 50%. Here's the next candle. It retraced about 90% of the move. I'm like, and in my mind, I'm like, okay, I can start to think about averaging down on this. At this point, I'm down like 40%. No, I'm lying. I'm down. I was down a lot. I was down like 50%. I'm playing with no stops. I'm not full position. I wanted to buy 3 contracts. I started with 1. The 28 call when I got it, I think it was like 90 cents. And it had reached a high of like I think like $1.30 or something like that, or $1.25, $1.30, something like that. But I didn't take it, right? And now I'm down at this point. I'm like down like 50%, 60%, 70%, something crazy. I'm just down big. Actually, I'm down like maybe 50% at this time. And I'm like, in my mind, I'm like, all right, cool, no biggie. This is gonna come back to test that downtrend resistance the way that it always does. And I'm like, this is where I should have taken my entry down here at this downtrend resistance. When it breaks and it comes back to retest, I should have taken it here. So silly me, but I can always average back in here, right? Boom. Next candle. It flushes through. I'm like, all right, no problem. Buyers are gonna step in. This is me on hopium and caffeine at 11 o'clock in the morning. Next candle. Okay, we're making a lower low, but it looks like it's exhausted. And we got this little gap to fill between whatever, I don't even know. Oh, from this 9:30 candle to Friday's close here, there's a small little gap to fill in volume. So I think we're going to just fill that gap and then go back up. That's my mindset. At this point, I'm down like 65%. Here's the rest of the day. We got that gap fill that we wanted, and it just died for the rest of the day. Right, so I didn't get to average back in because I didn't see a continuation. I didn't see like a morning star here or something else, so I didn't get to take it. You see a little bear flag that occurred here, broke down. I wasn't fast enough and I wasn't in a situation where I could have just switched to the put side because whenever I do that, I usually have to be in front of a computer. And I'm still in the play. I think it's like down like 99% or something crazy. But the whole point of that was, so one thing that I did do that I kind of respected myself with was I scaled into my position. I didn't go full position. And I didn't go full position. I scaled in. I had this on my watch list and I had been watching it. I was expecting the move. I had the catalyst. But the biggest thing that kind of, and the first rule that I disrespected was I played counter trend. And I even said it on the call last night, guys, if the market's going down, you're going to be very, very risky buying calls. And it's wild because I saw my 30%. I just didn't take it and I didn't set any stops. So big no. That was a loss for today. So yeah, that's that. I mean, and the ideal time would have been for this to form a doji, and then for this candlestick right here, you see how it kind of started forming that higher high, and it tested this downtrend from the bottom. I was like, okay, we got our morning star forming here. Now I'm gonna wait for the next candle to kind of start forming up here, and it never happened. So I didn't enter anymore, and thankfully I didn't make it a bigger loser than what it was. So the other point that I want to make with that is confirmation is greater than anticipation. And so if you try to anticipate, which is what we do pretty much on our weekly watch list every week, is we try to anticipate which direction things are going to go in. You try to anticipate, and it's just understand the risk associated with it. Like, we use technical analysis to try to identify key areas where we can see, hey, there's going to be reaction here. For example, this downtrend resistance line, right? Let me go back to the daily so you can see it. This falling resistance line right here, right? I had a reaction on this day. Look at all these days where it reacted to that line. I kind of tested it here and it flushed underneath it again here, right? Same thing. So I was kind of expecting that, something like that along those lines on today's intraday, where it kind of opened at it, tested it, and that's why I was hyped. I saw this test and I saw this big green candle and I'm like, oh, I'm hyped, let's go. We're gonna see 29 today. When it came down, I'm like, all right, it's gonna test it one more time before it continues. Hopium. And then the final thing would have been to see it test on this side and not form that higher, continue to form that higher high and close higher. That was the signal right there to get out. So I anticipated that it was going to continue going instead of waiting for it to continue going. I anticipated that it was going to hold this line instead of waiting for it to hold the line, right? When I saw some of these like this opening lower and closing lower than this one, even though it didn't break the low, I should have known that, okay, doji, decision, right? Strong move, indecision candle, decision candle. Like, and if it wasn't clear here, it's definitely clear here. And I usually get out on the break of the trend. This made a lower low, so I should have. I really ignored my rules today with this trade. So I mean, when you anticipate the move and it happens the way that you anticipated it, cool. If you decide to take the early entry, now you're putting your money at risk. I'm not saying that you're not gonna be right, but you're putting your money. You have to understand you're putting your money at a greater risk by not waiting for a confirmation. Obviously, waiting for a confirmation will cost you just a little bit more money, but it's worth the investment, right? With that, for those that don't know, confirmation means you enter the move once you're sure that you're not being faked out. Now, for me, I was playing everything off of this white line. And this is me just watching Macy's and me being hype off the earnings, right? And the $2 billion buyback and the increase in dividend yield and all this stuff. There was a bunch of stuff in the news. I'm like, yo, I don't care what the market's doing. I don't care about Ukraine. I don't care about energy. I don't care about nothing. I just care about this earnings. This earnings is the best thing in the market right now. Like, this is me. I was lying to myself. So with all that, I ignored the double top, right? I ignored the double top. I ignored the this little box that we were in right here, the flush out of that box. Not once, but twice, right? So the point of that is, I anticipated the move and I was high off life when it came to the play. Yeah, exactly. The sanity, right? And I wasn't able to see things for what they were, right? I wasn't able to see things for what they are. So when you wait for the confirmation, then it's gonna cost you a little bit more money because you're not buying it. Let me go to a different chart so we can see a different chart. Let's go to. Let me see. Let's see. Let's go to Neo. Neo's a good one. I didn't play Neo, but Neo has a good one. So I didn't wait for it. I just jumped in. I anticipated the move, and instead of waiting, being patient, like they always tell you, like everybody on Twitter who's a pro who never loses, right? Bullshit. But anyway, they always tell you, be patient. And when you're not patient, that's what happens, right? You end up losing a little bit. And then so if you enter once the move has happened, you're sure that you're not being faked out, and once you see that the expected reaction occurs, now that it's continuing to move in the direction that you thought it would, you have peace of mind, right? You don't have to guess whether it's going to try to do it for you. You have peace of mind. You don't need to guess. Now, it's going to cost you more, but it's worth the investment. And I want to stress the word the investment there. Some of us are guilty of treating options as gambling. And by us, I really mean me. I'm looking at the mirror right now. And I, constantly looking for far out the money strikes with very close expiration, really chasing those like large percentage gains. Like, I want to see 300%. I want to see 150%. I want to see 200%. I want to see 1,000%. Right. And I mean, yeah, it'll come, but there's more risk associated with those type of plays, obviously. And so it's more of a gamble as opposed to something that, you're paying a little bit more for, you're investing a little bit more for, but in that investment, it's more secure, whether that's buying something that's closer to the money or buying more time on the play. The investment is going to pay you better than the gamble, right? Because how many times have we bought something that's pretty much, one or two strikes out of the money? Let me get a 0 in the chat. For every time you bought something that was out of the money, just a little out of the money, and you had a few days on it, and the play absolutely went to shit. Let me get a 0 in the chat if that happened to you. And this chat, yeah, exactly. This chat should be full of zeros, right? Because I know personally that everybody's suffered from this. So, and I'm no different. I mean, all of us, we've all been there. So instead of getting super risky plays that easily turn around, think about, and I keep a couple dollars on my desk when I'm trading. Think about how much hours it takes for you to get into to earn that money, right? Think about what you have to do in your life to earn the money that you're putting at risk. And that'll help you to be a little bit more patient and give you a, it'll kind of put things into perspective. Because when you see the dollar amounts on the screen in the digital, a number on your screen, it's not real. When it's a dollar bill in your hand, then it's a little bit more tangible. So the point of that was just to kind of wait and wait for the confirmation, right? Wait for the confirmation. Miss the first move. It's fine to miss the first move. Nobody's a perfect trader, and nobody's going to catch the first move. I don't care what anybody says. Nobody catches that first move. And if you do, then consider yourself lucky and take profits when it's there. I had the profits with Macy's and I didn't take it, and now I'm sitting clapped right now, right? So that's that. I want to look at Neo real quick. So let's ignore. Let's see. I'm gonna update this chart real quick, and I want to see what you guys have to say. Let's see. I don't want to show. Okay, so let's just say this is Neo's chart, right? And I'm just gonna draw some lines. All right. Here. Right there. And right there. Okay. Now I want you to look at and pretend this is any single time frame that you trade. Doesn't matter. Can you guys see? There's a letter A up here. I don't know if you guys can see it. There's a very tiny letter A up here. And then let's see. Letter B right there. Letter C right here. I want you guys to tell me letter D right here. Letter E right here. I want you guys to tell me and F. I think that's good. Now I'm gonna just circle them so you guys can see, in case I know my screen, I have a high resolution. So A is up here. B is over here. C is over here. D is over here. And now we're playing puts. Okay? We're playing puts. With that knowledge, you see A's up here. A would have been the absolute 100% maximum best entry for puts. 1,000%. So I'm not even going to give it to you. Why is B a good entry? Show me in the chat. Why is B a good entry to buy puts? Why is B a good entry? There's no wrong answers. Pull back a little bit, retest, could be retracement. Broke your first level and retracing back up before the next move down. B is kind of a confirmation because lower lows. Let's see. Okay. I saw Spider was, oh, there we go. Retested, rested and was lower than the 50% of that big red candle. Okay. Okay. Nobody's wrong. I mean, you all essentially said exactly the same thing. So let's draw a fib on it. Let's draw a fib on it. Where's my fib tool? A is, let's just call A the start of the move because nobody would have caught it there. Nobody would have caught it there. And we'll ignore this little piece over here. So we got the start of the move over here to the end of the move over here. And we came back and I drew a fib on this because a fib helps me to measure how much it retraced. That's all that it does. It just helps me measure how much it pulled back. Gavin said it pulled back a little bit. For Gavin, it might not be 30. This shit pulled back 38.2%. Doesn't matter. For Fab, she said it retested. It might have just come back to retest a previous level. Could be retracement. AT, could be retracement. It retraced just a little bit, right? Pulled back just a little bit. It broke my first, J Mitch says it broke my first level and is retracing back up before the next move. You don't need to draw fibs for that. You don't even need a lot of levels for that. You can kind of see that it consolidated here, came back, and now it's coming back to try to see what else, see what else it has up here. And then on this candle, it tells you nothing, it has nothing. Let's keep going down. B is, it is forming, so this would be higher highs, right? Here's a high, here's a high, here's a high, here's your lower highs, right? Your lower highs. Fold. So yeah, lower highs. I mean, that's enough, right? And then it rested, and then it went 50% below that. Let me see. Rested and was lower than 50% of that big red candle. This one, yeah. I mean, it rested and then it came back, tested halfway through this candle, and then came, So there's no wrong answers. Somebody tell me why C would be the best entry. This candle on C. Tell me why this would be the best entry. I want to see you guys write in the chat. While you do that, while you tell me why C is the best entry, this candle here, I'm gonna go grab a glass of water. I'll be right back. Let's see. Broke the support level. So we had our support level here at 2280. It broke the support level. Momentum candle with a continuation of downtrend. Big Momo candle, yep. Broke the level, yep. Momentum would have caused me to get in on that candle, yep. Hit support, traded sideways. They made a decision to keep going lower with the next big red candle. Yep, 100%. You guys are absolutely correct. So that's a great entry. If you took the puts there, I mean, this is like a 300% candle or 200% candle, depending on. Yeah, it moved a dollar. This one candle moved a dollar. So big candle, and it actually went as low as 2073. So big candle, big fucking candle. All right. So now tell me why D is a good entry. Tell me why D is a good entry. And I'll tell you guys right now. For me, we'll get back to it, but I think D is the best entry. And I'm cheating a little bit here, but I'll tell you why after. Why would D be a good entry? Let's see. Retested your level and rejected. Retested support where it broke down. Retest with a lower high. Yep. Support became resistance. Retest rejected. To me, D is the absolute best entry. 100% the best entry possible. And all right. Let's see. Interested to hear your thesis, but B would have been best entry. B is a really good entry. B is a very, very strong entry. Looks kind of like trouble on the resistance. Yeah, B is a very strong entry. I'll tell you why D in a second. I want to finish through this. Why would E be a good entry? And it's pretty clear. E is pretty clear. I mean, but let me see what you guys have to say with E. Broke level. I mean, clear. It's just clear as day. There's a support there at 2217, and it broke down. Right. It held up 6 times in the past and it broke down. So, very, very clear. And F would be, F is the back test, right? So I cheated a little bit here. I cheated because I'll show you why. D is the best entry. D is the reason why I put Neo on this presentation. D is the reason why I put Neo on this presentation. So this is Neo with no after hours whatsoever, right? Now this from this red candle here and before was yesterday, was Friday. Let's see. Photo said I don't know the pretty wording, but for D the previous candle went green, and from the video it looks like it could have been a 3-bar play down. Not sure because of the volume. Well. So Fola, show me and watch. Take it and actually take what you see. Take the 3 bars, take a screenshot of it and post it in here so we can see it. because a 3-bar, this is like a 3-bar, like this big red candle here, and then kind of a resting bar, and then the third bar, it's like not perfect because it didn't break down, but that's why 3-bar plays are also called 4-bar plays. It rested and then it continued. For this one, it was more choppy than anything else, right? This is a 4-bar play. This here is a 4-bar play, 100%. Big range bar, broke down previous support, resting bar, continuation. 2 resting bars and then continuation. Definitely a 4-bar play. So whereas this is more of a, what I see here, I don't see any direction here. I just kind of see up, down, right? Kind of a range. The reason why I like this entry, and B would have been a sniper entry, but looking at Friday's price action, let me zoom out a little bit because I hate when candles look like this. Looking at Friday's price, I mean, it was up at 26. It came down. It broke down hard on Friday morning, and it continued down, and then it started to curl and make higher highs. So these higher highs, this curling, and this kind of there's kind of a shoulder here and a shoulder here. I wouldn't have gotten inputs on this just because of that. I would have wanted to see what else it does to the upside. That's great, man. That's great to hear that you picked up the 4-bar play. You're gonna start seeing them everywhere. But I mean, Gavin, you're right. This would have been the best entry if we would have had all this here. But just in context, seeing it here, and if we look at it on a daily and ignore today's candle, I mean, yeah, I guess you would have wanted to play puts because of, and context matters, guys. You wanted to play puts because it broke this downtrend, this rising support line. It broke it hard. No reason to play calls. No reason to play calls here. Potential pivots on a smaller time frame scare me because I don't know where they're gonna go. This pivot here, going back up, making higher highs, scares me. I don't know where it's gonna go, so I would have kind of chilled. But the reason why I like B, or D rather, as the best entry is because we formed, that's the low of yesterday's low. We tested it once and kind of failed it, and then we came back to test it again and we didn't break this. I'm looking at this candle here, this green candle, and this green candle. We didn't break the high of that green candle. We failed the retest, and we put in a bearish engulfing. Not that it kind of, it would have been a bigger, a higher open, but I mean, this is just a big bearish candle, and so I would have taken an entry here on puts had I been watching Neo, had I been watching anything to the downside, and today I looked at the oil tickers that we talked about yesterday, and they all moved down, so it was kind of like really confusing. So that's why I like this entry, because we got the low, the retest, and then the low, and then the open test, and then the second retest. I like those second retests are nice. In context, knowing that we broke down on this downtrend and it pulled back, this green candle would have been your entry to buy puts, and that would have been perfect. So good shit, and you guys have been killing it. So sometimes like I wait for that added confirmation, and sometimes I kind of fake myself out. So action is better than indecision. Let's see. Getting back to my notes. So all right. So based on what we spoke about, there's only a few signals that are real time, right? And those signals are the price and the volume. Those are the only signals that matter. Price and volume are the only signals that matter, because they're true and they're real time. Right? They give a true sentiment and they're in real time. Everything else is lagging. All these moving averages are they're kind of indicators that exist in the past, right? They take past data to form where they are now, so they're kind of lagging. They're misleading in a sense. It's not to say that they're not very important, because they are. But I just think that at the end of the day, you boil it down to it, it's price and volume. That's the only two things that matter, right? Now, that being said, the indicator or set of indicators that works for you, and by works for you, I mean the ones that you understand the most, the ones that make the most sense to you. Those are the ones that you're going to use to kind of take entry on and trade based off of, right? Some of these levels, some of these things are horizontal levels, which are support and resistance levels, right? So I just call them, as you know, I just call them levels, but like this level, which was support and acted as resistance, a horizontal level, right? Falling and rising levels, such as this blue line, this rising level, once it broke that level, that support, and it actually came back and back tested it, and then it opened lower, and then it started breaking the lows. This is a great entry too. This is I can't believe that we didn't discuss it. This is a fantastic entry. 3 bar to the downside. I mean, this is just, it's textbook, right? Another good level, pivots. When you see like kind of pivots forming, then you can think about taking entries. For example, like Gavin pointed out, B would be a good entry because there's a pivot here, and really it's in the greater scheme of things, it's a pullback to continue the move, right? It's just a pullback. So pivots give you really good prices. Moving averages. So I'm going to pull up OCGN on this because I was watching with the moving averages, and things such as volume shelf, and other things. So I think VWAP is there too. Yeah, VWAP is part of my list too. So the things that I mentioned: horizontal levels, falling and rising levels, pivots, moving averages, VWAP, volume shelf. What do you guys use? Which ones do you keep on your chart 100% of the time? 9 EMA, price volume, VI. I don't know what VI is. 9 EMA 21 and VWAP. VWAP and 9 EMA 20 SMA. Oh, the vortex indicator. Copy. That's a good one. What else do you guys use? 99 day or VWAP, RSI, MACD. Yeah, Folo's good with the MACD. Now, the reason why I asked this question is because, and I'm waiting for BT. She's gonna give her secrets away. 5, 9, 21, VWAP, and TTM. Take notes, people. she's giving away her secrets. The reason why I asked what you use is because it's it's subjective. Like I said, just to circle back to the beginning point of this, it's subjective. It's what works for you. The TTM is it's a momentum indicator. I'll throw it on my chart real quick, and then you guys can talk about it. Let me see studies. Throw TTM. Edit studies. I love TTM. I don't use it as often as I should. TTM squeeze. 921 VWAP, TTM, and opening range break script. TTM squeeze is an indicator that shows momentum, whether bullish or bearish momentum. So when it's light blue, it's gaining bullish strength. When it's dark blue, it's losing bullish strength. And when the histogram is red, then it's gaining bearish strength. And when it's yellow, then it's losing bearish strength. If you use the MACD, it's very, very similar to the MACD. The only thing that's different about this is it gauges volume and the size of the candles. That's why you get some of these big upswings and downswings on the histogram. You see like today's price just to the right. Look at how high the histogram went on that on today's move. Mad high because we had some big ass candles. And then the dots, the other thing that kind of differentiates it from MACD, is very similar to MACD, but what differentiates it, another thing is if you look at the dots at the zero line, which is this zero line kind of right here, where these red dots and green dots are. Green dots are volatility. So when it's green, that means it's firing. It's very volatile. It's very strong. I think Webull has it. Oh, you know what? It might not have it. It might not have it. Can somebody who's on Webull, who uses Webull in Go Rush, let us know? I think I don't know if it has it. I don't know if it has it. Yeah, it might not have it. But TOS has it, and I think TradingView has it as well. So you can always switch to TradingView if you want to test it out, J Mitch. So when it's green, it's firing, but when it's red, that means that price is in a squeeze, volatility is in a squeeze, momentum is in a squeeze, and so the best entries are when you kind of see that when you see that this is red, that means that there's going to be a big volatile move coming out of this soon, right? Whenever this is red, usually you'll see price kind of forming a box. So I'm going to draw the box where I see the TTM is red. So really from here to here, that's your box. Let me just change it so it's a little bit more visible. Right. So TTM shows you kind of where momentum is and also predicts. I mean, it's just something else that's visual that kind of tells you, hey, there's a big move incoming, right? There's a big move incoming. So it tested the bottom of the range and it found some support there. The thing is still red and it's still on the bullish side, so it might go back up, but it can easily go to zero and then flip and go down and fire down, right? So it depends. TTM is really, really great, especially for the lower time frames. So there's no secret sauce to this. I mean, everybody uses something different. It looks like a lot of us use VWAP and a lot of us use that 9 EMA. That 9 EMA is that's like a market. That's like one of those market wide indicators. The 9 EMA, RSI, MACD, VWAP. Those are things that the whole market uses. So when you have something that the rest of the market uses on your chart and you know how to interpret it and you can kind of predict what it's doing and where it's going to go and the price action confirms it, and you're off of support and you're on top of the VWAP and you're thinking about buying calls and you're near a resistance and you think that there's volume to break it and 10 other reasons why you should take the trade, that's where you find your entry. That's where you find your entry, right? So there's no secret sauce to this. It's only the sauce that tastes right to you. So you find whatever makes the most sense to you, whatever patterns, whatever indicators, and play the signals that they provide you. So if there's a box and you see that it's gonna break to the downside and the VWAP is above the price and the 9 is above price and pointing down and the 21 is above price and pointing down, and it breaks down the box and it comes back to retest it, might be a good entry to buy some puts. For example, right? The more signals that you see, the more the stronger your case is. And really what you're looking for is just, I have an idea and these are the 25 different things that corroborate my idea and tell me that this is a good idea. Let me take the play. So I have 2 more sections of this and then we can do some charts. Let's see. Let me just go through my sections. Okay. So let's see. I guess I can skip this part. I'll go into OCGN. Now OCGN, and I was gonna riddle you guys, but I think I'm just gonna go straight into it because we've been talking for a minute already. So OCGN, I looked at OCGN today because it showed up on one of my scanners, and I just want to go into, I'm searching because I want to see what time I mentioned it to the community this morning. Let's see. I don't know why it's not letting me search. Hold on. I don't know. It's not letting me search. Anyway, I mentioned OCGN at some point this morning. I said the 4.5s look good. And if somebody can find it, if somebody can find the screenshot, it was on the trade floor for me. It's not letting me search right now. Let me try on my phone. Because it had a few things. Like it showed up. The first thing was it showed up on my watch list on a very specific scanner that I have. that I shared here a while back. That basically it just looks for high net change and good options activity. That's pretty much it. It's very simple. Let's see, and then maybe on one of these homework sessions we could discuss scanners. That'll be pretty fun. Let's see. Okay, so it was at 10:44. I said OCGN 4.5 looks good. I didn't want to call anything out because why am I gonna call calls if we're in a put environment? That being said, at 10:44 a.m. on the trade floor, I posted OCGN 4.5 looks good. So I'm just gonna post it here so that we have a record of it. I don't think that this is saving over to our. I'm not saving over to our YouTube feed, but for your guys' knowledge, 10:44. So 10:44 is on this candle here, right? 10:44. 10:44 might have been like up here at the top of this candle. So let's go into the smaller time frame. Let's go to the 5 minute. 10:44 was here, right, on this candle. Now, I saw when I saw it, I just saw that it was kind of. I was looking at it on the 15 minute. I was watching all my charts on the 15 minute today. Not really getting more granular than that. I saw the big move, and then it sold off. All right, J Mitch, no doubt. Yeah, I'm happy that you're here, that you're with us, man. See you next time. So yeah, I saw that it sold off a bit, but I wanted to continue watching it because I liked how it was moving. I know this ticker doesn't really move much, but when it does move, the days that it gets news, it does move kind of crazy. So I saw it, I liked it. I didn't do anything with it. I just thought it was interesting, and then I saw it pull back. And so, as you know, if you guys were here for last week's lesson, then you know that we could have ran a nice fib on this. Fibonacci from the start of the move, which is all the way down here, to the end of the move, which is the 453 right here. Start of move to end of move, go from down to up in an uptrend, and then you saw it pull back. That pulled straight back into the 38.2 Fibonacci. It came right back to the fib, and I saw some buyers stepping in here. Not only that, but I saw that it was kind of hanging onto the VWAP. Not only that, but I saw that it came and tested the 9. This gold line is my 9. So this EMA cloud is a 9 EMA, 21 EMA. So it came and tested the top of the cloud. The cloud is green, which means it's in an uptrend, it's bullish. It came and tested it once, and tested it twice, and held the VWAP the entire time. That's a good entry. It's a good entry, right? On this, when buyers would have stepped in on this second candle and it would have came back up above this 38.2 fib, I would have triggered a buy. I would have triggered a buy as soon as I saw buyers buying it right back up into this VWAP over this 9. Those are 3 reasons, so we got the 38.2 fib. First of all, there's a catalyst, bunch of volume. Today there was 667% average volume. We got the move, we got the catalyst. It pulled back, so I'm not buying at all-time high or at today's high. It pulled back. It found support, so that's another reason why I should jump in. Held the VWAP, another reason why I should jump in. Tested the 9 twice, 2 reasons why I should jump in. Take your entry, like that's already 10 reasons. Take your entry, and you could have jumped into 4.5s, and you would have taken them from here up. And I think it gave like 30% on that move. Nothing crazy because this is a very small name. You buy commons on this. It also held this 50-day moving average. It gapped up above the 21 and held my red 50-day moving average on this downside move. So it's yet another reason why you want to jump in. So the point of this trade is there was like 5 or 6 reasons that told me that I can buy calls when it was around this area. And you got to watch it. You got to zoom in and out. 5 minute, 15 minute, 30 minute, 1 hour, 30 minute, 10 minute, 1 minute, 30 minute, daily, 30 minute, right? Just in and out. So we have the fib, we have the VWAP, we have the 50, we have some buyers, we have the 9, a bunch of reasons why you jump into this trade. We have the volume, right? A bunch of reasons. The next one that I want to go over, and then we'll see. I have just this last one, and then I'll talk a little bit about risk reward, and then I want to see what you guys got. SPY. SPY. I mean, SPY was a simple day today because we had the news. We opened up below our moving averages. The 200 is this green line, and the 21 is this red line. So we have the news. We have the catalyst. Where's the 50 at? 50 is way up here. We're about to get a death cross soon. Probably another, maybe end of the week or another week. We have the catalyst. We have the news. We have all the stuff. Thing is going down. It's gonna go down, right? We come over here to pre-market, and we see that we kind of bounced for whatever reason, and people probably got bullish on this, but I mean the market was a market. We're at war, or Ukraine is at war rather, right? We gapped down at the open, and so we gapped down at the open. That's very telling, right? We know that this was a hard level to break here, this box right here, because it formed that kind of box, and it didn't break to the upside. It just came back down, not even too far, right? So not even like a real like the supply zone or anything. It just kind of came back up to this range. We have this range, and we kind of tried it a bunch, came back, and then tested it after the open. First of all, a big bullish move like this after an open on a down day is like straight bullshit. Like you know that this is the fake out. You know this is a bull trap. Everybody's bearish. You know this is a bull trap. So it came up, it gapped down, it opened, gapped up off the VWAP, came all the way to this top of this range, and it tested this line right here, and then it came down. Next candle, tested VWAP, came back up, kind of opened where it closed. Next candle, opened and came up, made a higher high. But again, we're testing this range again. I use this study called Gold Rush Woodies, which are basically like intraday support resistance levels, which tend to work out really, really well. I think it's in the. Let me just make sure. And if you guys, I mean, it doesn't hurt. It doesn't hurt to have one extra little tiny indicator. So if you look, it's right here in our studies and hacks channel. For anyone who's 24 karat gold, you have access to these. This study here, Gold Rush Woodies. Sometimes you don't even gotta draw lines. You can just play the Woodies. Whenever it gets to the red level, it usually rejects. Whenever it gets to the pink is pivot and green is support. And you usually have 3 of each for the day. Except for the pivot, you got 1, 2, 3 red, which these red lines line up with the previous levels that I've drawn here, and it'll happen that way. So that's pretty interesting. So it came up, rejected the Woody, and again we have a downside bias because of all the news, and we're awake, and we know what the market is going to give us. We know what we're expecting. We have our bias. There's enough telling us that it's going to continue to go down. This is a bull trap. But if you're still not convinced, take it at the flush of the moving averages, the 9 and 21 EMA. And if you're still not, and then obviously we're back at VWAP. So we've been fighting that VWAP and holding it this whole time. We even had some buyers step in. On the next candlestick, it kind of opened up right at VWAP. It rejected where the 9 was, and it closed down below VWAP. So, I mean, we're underneath the 9, rejected both the moving averages, rejected the Woody, rejected this pre-market level. We are already bearish because of the markets, all this bad news and all kinds of stuff. There's no good news right now, and there's no kind of catalyst for us to move to the upside. So with all that stuff and this rejection of this VWAP, right at the VWAP, I would have entered this to the downside. I didn't trade this today just because I was sitting clapped at Macy's and I was super busy with work, but clear downside move. A bunch of kind of indecision with some slow, if you just look at it, slow downside fade, retested the 9. This is another good entry. Came back, retested, another good entry, and then it finally flushed. And it came all the way down to kind of this level that we drew out, this gray box that we drew out on yesterday's call. And apparently there's a channel here as well. So I mean, the point of this was just look for 10 reasons why you should jump in a trade, and that's where you take your entry. Come into the 1 minute, and let's look at this. Let's look at this on a smaller time frame. And I mean, you guys know this already. You guys are snipers. You guys are really strong traders, and I'm very, very proud of being part of this group with you guys. You guys impress me every single day. So and I mean, this is what we wanted to do. We wanted to build a bunch of monsters, and you guys are animals. So so thank you for giving your best. And I know a bunch of people probably took it at the break of the VWAP here. I just turned my VWAP on because I don't really trade with VWAP, but it's on now. Break of VWAP would have given you your play, a bunch of tests of these moving averages. You got 3 tests right here, and you couldn't break that high, and you're actually forming lower highs. That's a flush. Here's a retest. That's another flush, right? So that's that. That's that with that. And I'm gonna be trading SPY a little bit more. I know I said that a bunch, but hopefully this week, when I have a slow week, hopefully Wednesday, hopefully Friday, I'll be trading SPY with you guys. So I want to build one of these small accounts up. So the last thing I want to talk about is risk to reward. This is a very important concept to grasp. It will help you tremendously when looking for your entry into a play. This might be, besides price and volume, this might be the one and only thing that you can take away from this call. This might be the only thing that you can take away from this call, and that's fine. Let's see something real quick. Let's see. Yeah. So this might be the one thing. If there's anything that matters, is this. Risk to reward is defined as the amount that you're willing to risk in order to obtain your reward. There's a few ways to put this in practice with your trades. I'm going to talk about one way. So I'm going to mention that you can do it based on position size. You can risk reward based on position size. So an example of this is when Cedro was talking about Facebook puts last week. And he was saying that the Facebook 200 puts are $15 for Friday. It was on Thursday night we were talking about it. And he said for next day expiration, 200 puts were $15 a pop, 15 cents per contract. The risk reward is strongly in your favor because $15, it's like a lotto essentially. It's so cheap, and lottos have great risk reward because they're so cheap that you can buy a 10 pack and it won't even hurt your pockets, right? You could buy like a 10 pack of something that costs 15 cents, and if you're profitable, if you made profit that week and you're playing Lotto Friday, you buy a 10 pack of something that costs $15. You spend $150. That $150, I won't do it. I won't lotto if I didn't make money, but if I made money and I have some profits, I'll take that $150 and I'll put it into some lotto. And that $15 can go to 20, it can go to 25, it can go to 30. I think those 200 puts went from 15 cents per contract to 30 cents per contract throughout the course of the day. So 100% return on a overnight swing, or if you would have bought it at open, it might have been even lower. So that's what I mean by risk reward based on position size. Now, I don't want to talk much more about that. There's a lot more to be said, and we'll discuss that in a different session. I want to talk today about risk reward based on where your stop loss is on the chart, and in relation to your entry and your exit. So I'm gonna have to bring out Trading View for this. So somebody give me a ticker. Post a ticker in the chat real quick. And we'll do a couple of these. All right, Netflix. All right, Netflix. What do you see, downside or upside? Downside or upside? Downside. Okay. We have our downside. Now let me go into this. This is the clearest. This is the easiest. Trading View is the easiest thing to the easiest way to kind of conceptualize this. So this the bottom, the low of this candle is 373.11, right? The low of this candle here, this red candle over here, is 357. Where would you enter? Would you enter at the break of this candle, candle A, or would you enter at the break of this candle, candle B? No wrong answers. No wrong answers. Candle A, which is today's candle, or candle B, which is a candle from a couple of weeks ago. Which one would you enter at if you want to play downside? No wrong answers here. So there's a very distinct point here, and again, no wrong answers. A and B. Candle B, candle A. Okay. So if I take my entry at the break of the low, let's use the break of the low to keep things simple. And I'm going to change this to a short position. And now, where would you set your stop? If I take if I take my entry on candle A or candle B or candle B, let's do candle A first. Take my entry at candle A. Where am I going to set my stop? Am I going to set it up here at 457.27? Am I going to set it over here at 410.67? Am I going to set it at the high of day at 392? So we have one up here. We have two over here where all this kind of traffic is, and we have three down here where the today's candle is. Okay, so everybody's saying top of today's candle, 392, high of day-ish. All right, so and what are we aiming for? If we break this low of day at 373, whatever it is, right? What is it? Low of day is 373.02. What are we aiming for? What's our reward level? What are we aiming for? If we break this candle, where's our goal? What's our goal with this? Give me a number, or a level on the chart. What's my high? My high is 392.42. So I'll put 390. I'll put 393. 393.09. Use low as a PT. That other candle actually would be a great price target. So this candle over here would be a good price target. So let me set my target up to the bottom of this candle. That's how you play strat, by the way, guys. You just set your targets to the previous peaks and valleys. Now, for this particular place, let's see, BT said 366, 359. So 366 would be here-ish. 366 would be here-ish. Yeah, right there. So 366 gives us a risk-reward ratio of 0.36. 359 gives us a risk-reward ratio of, I'll put 359 even. Well, that's as close as it can get. 359.04 will give us a risk-reward ratio of 7.7. Now, if we put it to the bottom of this candlestick, we get a risk-reward ratio of 0.81. Right? Now, do we think that that's a strong risk-reward ratio, or do we think that that's a weak risk-reward ratio, or do we think that it is what it is? It's just is what it is. Weak. Fab says weak. It's not even 1-to-1. Fab says it's not even 1-to-1. Weak. I usually like at least 3-to-1. Gavin's on that Sam. That 3. I need 3 to 1. Weak, says Spider. Fab says I like 2 to 1. So this doesn't have the best at this current setup doesn't have the best risk reward right now, right? Let's look at the next ticker I saw was IWM. Let's look at IWM. IWM is breaking a bear flag. Remove drawings. IWM is breaking the bear flag. Sometimes it's hard to see when they're so tight like that, so you kind of just gotta squeeze a chart together. Excuse me, to make it a little bit cleaner. We got our flagpole. We have our flag, which is kind of a rising wedge. Breakdown. Right? So we're kind of clapping me, so I'm in and out. I feel you, man. So let's see. All right, so with IWM, love it. So with IWM, let's say our setup was this bear flag or this rising wedge, right? I'm gonna go short. I got my short position. I'm gonna go short. I'm gonna enter at the break of this candlestick here, this green candlestick here, the bottom of that candle. I'm gonna set my stop at this top where it kind of double topped, and I'm gonna set my reward to the very bottom of this flag to make at least the H. It's gonna at least make an H, right? That with that setup, with this bear flag setup, and my clearly defined break, which the day opened and it even gave me time to make the play. It broke the low, and now I can activate my trade. And my setup is the H, break of the bear flag, rising wedge, which is bearish, etc., etc. So now I have my clearly defined entry, my clearly defined stop, and my clearly defined risk, right? And this particular trade is a 2.93 risk reward ratio for IWM. Right? Now we're talking, right, Fab? Now we're talking. We got a nice, clean, good, clearly defined targets, good risk reward. So risk reward, and I'm just gonna go to is beautiful. It is beautiful. I'm gonna bring in my notes here. Oh, I think this is full screen. So let me on full screen. Let me minimize this. Okay, I'm bringing my notes here. So you have to clearly identify where you're gonna enter the play and why. Where and why, right? My where is, and let me just zoom into this a little bit. My where is the break of this candlestick is my where. Let's see. My why is we got that bear flag. We got the rising wedge, which is bearish. We have a bearish market. And we have technically a break of the low. This is a change in trend. We had these higher highs. Now we have a lower, kind of a break of a low, right? So that's my why. Where am I going to get taken out of the trade if the setup is no longer valid, right? If the setup is no longer valid, where am I going to get taken out? I have that. I have the close of this candle and the close of this candle is where I'm going to be taken out. That's where I'm going to be taken out. And where will I either take profits or begin to take profits? Where am I going to take profits or begin to take profits? I have it. The bottom of this wedge is where I'm taking profits. That's a 2.93 to 1 risk reward ratio. Let's see, FOLA. And no such thing as dumb questions, bro. Trust me, because I'm the guy to ask every dumb question. What was that?
It just felt like a really long question.
Oh, nah, bro. Nah. It's all good, man. Let me read it. Let me just read it to make sure I'm clear on it. I like to get better at seeing relation between share price and contract price. I understand the delta is a dollar increase for option, but these smaller moves in entries and exits that aren't full dollar, I'm not sure accurately how they make or break my risk reward for options. Okay, very, very important. I feel like to understand this, I need to constantly have delta in my head. So this is not a dumb question at all. This is actually a very, very high level question. So options. So risk reward ratio. You can see I actually have on my notes here. Risk reward ratio, RRR, or simply known as R, can be used to identify the risk to reward on plays regardless of whether it's a stock trade or an options trade. That's why people use it, because risk reward ratio. Like somebody be like, oh, I made 20%. You know, I made 10 G's in the market on a 20% options trade, or I made 10 G's in the market on a 2,000% options trade. It's the same 10 G's, and it can even be the same trade, but you know, were you trading stocks, were you trading options, were you trading futures? With risk reward, you can quantify every trade has an R. Every trade has an R. This trade's R is 2.93 or 2.93 to 1, right? The Netflix trade was 0.8 to 1 or 0.8, right? R. What would you say? Would you say a low R is better or a high R is better? Which one would you say is better, low or high?
The lower risk.
The lower risk, which would yield a higher reward.
Yes.
So lower risk, higher reward. That ends up being a higher number, just high. You know, the higher this number, this 2.93, the higher that is, the better. Now, if we look at, there was a trade that I was looking at that like had some crazy risk reward ratio. I'll find it for us and we'll talk about it. We'll talk about it at some point this week once I find it. But you want these high R's, right? Now, with options, when you throw options into the mix, it gets things a little dicey because it's like, you know, it's kind of hard to quantify because people can play different contracts. Contracts have different levels of support and resistance, so it's a little bit different. So with options, if you're doing this kind of risk reward where you're measuring R, you always got to measure R on the chart. You always got to measure R on the chart. Now, if you take a 200 put versus a 196 put versus a 190 put, the returns are going to be way different. The R is going to be the same, but the returns for each play is going to be way different. So when it comes to options, you got to talk about position size. You got to talk about, you know, particular option, how much the contract costs, how much you're willing to lose on the contract. Those things get very specific. You know, if you're willing to lose $300 on a trade, then if you ask me, I would trade $300 and be willing to lose it all. If you ask maybe Gavin's willing to trade $1,500 but lose 1/5 of that, 20% of that. So at 20%, he's out. Right? Fab might have a totally different one. Spider might have a totally different one. You might have a so that really depends based on the price of the premiums, the size of the position, and how much you're willing to lose on the position. So that's something that's not as quantifiable as this, which is why, to simplify it, like if I'm willing to lose $500, then I'm gonna trade $500, and I'm gonna usually run with not either no stops or a very loose stop. Because I'm willing to lose this 500 to make twice as much, 3 times as much. So it's kind of a hard question to answer, and it's a very high level question. When you asked, I think I'm gonna have to pull the big guns in for that to talk a little bit about risk reward when it comes to premiums. You should always keep delta in the back of your mind. You know, whenever I'm looking at chains, I quickly glance at the delta and theta and see what their relation is and what their relationship is. I should already know, like some of these slow movers have a high delta and a low theta, and some of the big boys like Zoom. I never play Zoom because Zoom is just like you have like a delta of 10 and a theta of like $1.94, some crazy shit. So, you know, so things like that. You keep the relationship in mind. I've been picking my strikes based on where this thing will land, not where it can land, but where it will land. So, for example, that 28 call for Macy's that I played today, it was at $28. I was in the money. I just didn't take my profits. I could have played the 29 for cheaper and made more, but, you know. So, in terms of seeing better relationship between share price and contract price, that deserves its own session. So maybe we can do that. We'll do that in the next coming weeks. Let me take note of that, actually. Hang on. That deserves its own session, because that's not a simple question. That's a very complicated relationship. As simple as the Greeks are, it's really it can be really complicated. What I mean is I can spend a lot of time talking about it. So, and I will. So thanks for bringing that up. Let's see.
Thank you.
Yeah, no doubt, man. And sorry, like I'm like kind of curving your question, but no, that's a great question, and
No, it starts me having a mental thought about it, and I can think about it more. So when we come back, I have a little bit better understanding.
yeah,
Thank you.
yeah, no doubt, man. The best way to do it, the best way to think about it is, or to start looking at it is just chart the contract next to the ticker on TOS. Keep the ticker on one side, and then do like a flexible chart, and do the top one. Do like three charts on the right with three different contracts, and see how they kind of move in relation to the stock price.
I've been doing it a little bit lately, but it's not like sometimes I guess there's a variation or stray in the
Yeah,
option ask bid than what is actually going on for the share price. And
yes.
sometimes looking at that leaves me a little confused.
Yeah, what's been happening a lot is and I noticed it. There's a lot of like put selling, and there's a lot of like weird kind of things happening in the market based on these downside moves. Um,
Mhm.
so what happens is like things get wonky when a bunch of like if a bunch of volume exits a trade, then you'll see that that the premiums will kind of drop, even though the stock price is going up, and that might just mean that person's exiting this. They're rolling out of this trade into a larger strike or something like that. So it's just weird, kind of weird things like that. That you won't really understand until you just start watching premiums and like what my trading setup looks like. It looks like this when I'm situated and I'm like at my desk, and let me set it up for you. So when I'm at my desk and I'm like in the zone, I got two screens going. Hold on, 'cause there's a bunch of shit. I need a different ticker. This ticker, Spy's killing my. Yeah, let's do PBR because I want to see what PBR did. And I know that it doesn't go so crazy in terms of the data. This is what my setup typically looks like. It's like my chart on one side and my premium on the other side. And I'm just watching the premiums all day. Just watching my premiums as the price is moving up and down. Watching the premiums because the premiums will make sometimes. Usually the way that it works is obviously the stock price moves the premiums, but sometimes you get this weird thing where you'll see the premium start to move before the stock price does, and that's when you can kind of tell that there's something that's going on the back end. So it's very high level, very very high level, and once you can kind of get a grasp on that, that's when you start entering the territory where you can just read premiums and barely look at charts. Which I don't know who has that. I know a few of us in the community have that talent. I know Fab was touching on it. I think I saw Blastoise talking about it earlier. Corey's watching premiums all day, and he has a good grasp of the relationship between certain premiums. So you just spend the time and look at them, and you'll see the relationship.
Thank you.
Yeah, no doubt, man. Let's look at one more chart to identify risk reward. Let's see. Let's get one more chart you guys want to look at. Yeah, it takes a lot of time because you got to understand like things are going up, things are going down, the velocity in which things are going up and down. I'll see it. I've been good at spotting it whenever things are forming kind of these boxes, these ranges. Then you got to start looking at the premiums, and the premiums will give you that extra hint as to where people think they're going to go. AMD. So what do you see for AMD? Upside or downside? The risk reward thing is it's on TradingView. It had two great risk to reward sets on two Fridays. So let's do Friday. Let's see. This Friday, this was Friday of last week. And then you can come in, babe. Huh? Soon. Okay. So we have this Friday, and then we have this Friday. Are you telling me they had good risk reward to the downside or upside? And down 2 weeks ago. Okay, so 2 weeks ago Friday, downside. Okay, so Spider, on the tool set over here on the left, you have like this kind of, it's like 3 lines. It kind of looks like a Fibonacci. So when you click that, it gives you kind of like drawing tools, different tools that you can use to kind of draw. You know, I think these guys use this to draw like future projections. That didn't work, but anyway, there's a bunch of different tools that you can use to kind of draw things. And so with this long position and short position, you can measure this is a good tool to plan your trade, long and short. So if we had a downside, a good risk reward to the downside, Friday, let's see, I think it was this day, February 11th was last Friday. Yeah, so here's Thursday, 2 Thursdays ago. And here is, let me just put a magnet tool on it. Here is the low of day. Let's say our entry was at the low of day. It's the downside. And let's say our stop was the open. And let's say our target was, let's say our ultimate target, let's say our target was, let's just get back to the previous low. It's a 0.53 to 1 risk reward ratio. Let's say we set our stop loss to the high of Friday's price action. So we already established a high. And if we go back to the high, they're going to get taken out. But our goal is to get to the low of the previous low over here. Now we have a 1-to-1 risk reward. Just by taking the entry at the low, setting our stop at the high of day. So our highs and lows are already, the low is our entry, the high is established already. Or rather, our stop loss is established and our target's established. We have a 1-to-1, right? 1 risk reward ratio. Let's say we start to scale out and we have additional contracts and we want to try to take out this low over here. Now we move our target down to that low over there. And now we got a 2.36 to 1. 2.36 is this green shaded area as ratio to this red shaded area. Right? If we tighten up our stop to the open of the day, now we have a 3.94 risk reward ratio. If we look at the day itself and we took our entry, and I'm gonna go all the way to the low because we got perfect exit. If I took my entry at the low of the day and I set my stop to the high of the open of the day, and I timed it perfectly, I got my puts, I got an 8.37 to 1 risk reward ratio. Right. Let's say I entered here on a swing and I got March expiration and I want to retest the bottom of this whole thing, this whole formation way down here. I entered on the break of this whatever this line is, it might have been some sort of broadening formation or something. I got it on the break of this low of day, break of the broadening formation. The moving averages are pushing me down somewhere. Let me see where the moving averages are. Right. I'm building my case. Finding my entry, building my case. I got the I got the 9 pointing down on the open of the day, you know, and this is OPEX, even though it's not, but let's just say this is OPEX, and let's say AMD is no longer acquiring ARM, right? And Lisa Su stepped down as CEO. All bad news. And I say, I can swing this till. I can swing this for 2 weeks until it comes back to test this bottom of this range. And I have my stop set here, my entry set here. Now I have a 16-to-1 risk reward ratio. 16-to-1 risk reward ratio. You know, at a certain point, you can just set your stop to break even. If you're in the trade and you already scaled out here and here at these lows, you scaled out already here, and now you're in the trade for free, you can set your stop back to break even and let this fully play out. And it won't stop you out until it comes back to this level. If it comes back to this level, it's fine because you're in free. But your final target would bring you down here, and you got a 2,526 to 1 risk reward ratio. That's insanity. And it's possible. And that's why I like these. That's why I like swinging, longer swings. Because you get risk reward ratio like that. You put enough time on it, and that's the kind of risk reward that you get. This will look more like this. and I set it to, you know, obviously my initial stop would have been, what did I just do? My initial stop would have been up here somewhere, but now that I'm in the play for free, I can move my stop down to my entry. Move my stop to my entry. Now I got infinite risk reward ratio. Imagine playing that for years and years. Look at how high. I mean, this thing can go. It's. So you get the point. So I like to use risk reward to find good entries. Good entries with decent exits, enough space where it has enough room to kind of shake out some people, and stops can get hunted, but still give you good good risk reward, good movement, good potential gains. Like Starbucks, I think, has a decent risk reward. You know, like if I would have taken a break of this, I mean, this is insane, right? You know, let's say I would have entered on the open, and I would have set my stop to this candlestick, the previous close, and I would have set my risk to this candle right here. So just a strat play. This is just a strat play, and you get a 2.74 risk reward. You know, and you can start trimming there. If you would have taken the whole candlestick, then you would have got a 7.93 to 1. And if you would have been swinging so far, you would have had 14 to 1 so far, right? If this continues, and you got more. So this is a great way to identify whether your entry is good or not. But the issue with this is you need discipline for this. I don't know if there's a way in Thinkorswim to set these automatically. I know you can set conditional orders or those bracket orders, which are very similar to this. So what you can do is kind of use TradingView to measure the risk reward, and then set your brackets according to these numbers, right? Set your brackets according to these numbers, and that'll be that, right? That'll be that, and then now you don't gotta worry about moving these because it's already set. You don't fuck with it. You leave it. So I think that's it for me, guys. I did want to share this video with you. Where is it? I did want to share this with you. You guys, please review it. The risk reward thing is probably the most powerful thing that I mentioned here. For anybody that's on YouTube watching the replay of this, copy link. Is this it? Go ahead and visit gorushgang.net. I made it super easy for you guys. It's so easy. gorushgang.net, and just go ahead and click on 7-day free trial. It's so easy. It's so easy. There's no excuse, guys. Spider. And if you guys and if you're watching this on YouTube and you want to see the video, check out this video that I'm posting in our homework channel. It's Van Tharp Money Management with R multiples. He'll talk to you about risk reward ratio. If anybody who's had a one-on-one with me, during my risk management heavy one-on-ones, you'll get this video. This is not a new video for you guys, but anyway, this is a really good video to visit. Thank you guys for being here, and I will see you in the community tomorrow. Peace, guys.